Hi, fellow traders. My name is Brian. Today, I'm going to share with you like how I have managed to reach a little bit of consistency from being consistently down for the past 3 years. I'm finally beginning to see the light. Like for the past 5 weeks, I've got some payouts, and my funded accounts are still surviving. Because I'm following a set of thought process, and the way I execute trades has been adjusted a little. So let's go into the details. Um, Now, okay, the very first step that I do nowadays is I'm focused on news. Like I will check what is ongoing. So personally, I focus on USD, JPY, and pound. So the news for USD recently is about mainly about the trade talks between US with various countries, and the most consequential of all is the trade talks between US and China. So if there's a breakthrough, which we are now waiting for the news, then the market will stabilize, and chances are US dollar will strengthen. So that's for USD. And then today in particular, we will look at Japanese yen. So yen has been observing what the US is doing, but at the same time, it has also mentioned that it is unlikely to raise rates until next year unless required. So then based on this, we are following the news. So following the news while I trade is very important. Like every few minutes, I will refresh once. So the strike on there, mm, considering, so nothing has happened yet. So I will look at the dollar index, Dixie, and what we're looking at right now is if we look at the levels of Dixie right now, I've previously marked a blue line. Is approaching a line whereby it's likely to have a reversal. And then if we look at RSI as well, it has been oversold for some time now. It has broken a new low on 1 hour chart. And then also, if we look at the math levels, it's going to approach another level. So the strongest reversal is when they reach level 0.8. So it could fall a little bit more before a very good level. But actually, this Murray math level just moved. Previously, it was already showing at this extreme overbought, but because it dropped further, maybe the whole range just moved. Then when we look at the Japanese yen right now, same thing. It reached 88 level. So it's the reverse of 0.8 level. This is a very strong level. When it touches, we are likely to see a reversal. So we can see that there is already a strong reaction, like three red bars, the third one forming. And then we were at RSI almost 80. So the RSI settings that I have is 10 instead of the typical 14. So I look at the level 80 and 20. So just looking at the JPY's index right now, I expect it to fall. Yeah, technical wise. So news wise, I expect it to fall. Technical wise is showing that it's falling. And then if we look at the current currency strength in between US dollars and JPY, we can see that JPY kind of peaked and it's about to fall. As to how far it will fall today, we will see depending on the news. But I think minimum it should come back to around neutral or maybe just plus 10. But knowing JPY, when it falls, when it moves a lot. It will move much more. It could even go back all the way to negative. So, then the third thing that I look at, right, is what are the economic data or news conferences that are going to happen in the upcoming days. So for the rest of the week, there are no more major news for USD. This is just a weekly routine. This is just normal as well. But then next Tuesday, we have Bank of Japan interest rates. So we are expecting no change. So it's unlikely to have great impact. And then the next Wednesday, we are going to have US rate decision. So based on Powell's announcements so many times, they're just observing till they have more certainty, depending on what Trump does. So we have BOE as well. So next week will be a big week. But let's just focus on this first 4 days. So next week, in fact, Friday, there's nothing much as well. I mean, Japanese inflation is important, but it's not the most important. So, looking at this, I've really formed a bias that if I'm trading USD JPY, I'm looking for a long opportunity. So what you see here on my MT5 is I have a 1 hour chart side by side with 5 minute chart. Why do I do that? Is because I like to look at the patterns on the 1 hour candle and also using 1 hour, I want to determine what are the key levels that I should be looking at. So we can see all these lines here is known as Murray Math lines. It basically tells us whether we are at a key level of trading. So if I'm buying, I want to be at least on this orange line, if not on this -1.8 or this very extreme, probably I wouldn't touch because if the Murray Math touches this, it's likely to move the whole range down. So if there is a reversal, then how we use Murray Math, right, is like it will stop somewhere here and then there will be a reversal. The moment the candle touches the 2.8 line and it stays there and close there, then the whole Murray range will move downwards. So where the purple line is indicated, right, is the last line of defense. If it doesn't turn, it will continue. So basically, if I am going to buy, I will just focus on the orange line, which is level 0.8 or -1.8. Otherwise, the last will be this purple. I will try one more time. If I don't make it, I will just end the trade. Okay, so how do we use Murray levels, right, to set our TP and SL, right? Assuming if I enter a trade here, I will set my SL somewhere around here. I'll set my SL somewhere around here, or even just at this, just below this level 2.8. Due to spreads, right? If it doesn't cross, it's somewhere here, and then the spreads might zap you. So I just set it this purple line. And then where do I TP for this case is I will probably set my TP around this level, or if I'm really confident, I can go all the way to the orange line. But setting it here will have a higher hit rate on the 7.8, or to be even super safe, just set here. So if we can see, if we buy now, our TP is about 1,100 points, and our SL is about 450 points. So there's about 1:2 win risk reward. Yeah. So of course, you can take more risk by setting just 200 points if you don't want to safeguard yourself against a further drop. So that's the TP and SL that we have. Let's see if I miss another point. Okay. So why do we have the 5 minutes chart side by side, right? Is to look at the candle patterns on the 5 minute time frame to time our trade even better. And typically, right, okay, back to the 1 hour first, is like I try to buy when the RSI is below 30. ideally it touch 20, then I buy. Then on the 5-minute time frame, ideally, if I'm buying, I want to see that RSI has hit level 20. So right now, it's looking bad if I buy because it looks like the RSI really wants to hit 20 before it bounce back, if it were to bounce back. But let's say assuming if the bounce happened from this level, right? Like let's say this part is really strong to push the reversal. So what we want to look for before adding more positions, right, is assuming if there's a reversal and this blue line moving average actually crossed the gray moving average. So it's a 50 MA crossing the 100 MA. If that cross happens, what we want to look at will be a situation like this, where there's a cross, and after the cross, if the price comes back to the 50 moving average, we just keep adding, adding, adding. And even if it touch the 100, I will still add. But of course, if it cross down and it looks very bearish beyond the 100, then I will just stop adding. And if we count from here to the peak, it was a 1,600 point move. So assuming if we keep adding along the way, we will have made quite a lot. Yeah. So that is the thought process and what we are looking for. And then into the indicators, if we look at the moving averages, it's very simple. It's just a 100 simple moving average based on median price. Then the other one will be 50 based on median price as well. And the method is simple. Relative strength index, basically I change it to a period of 10 and I'm added in 20 and 80. And if we look at the indicator from for Murray math, basically is the inputs. I've adjusted the periods to 64 and the upper time frame to 1 hour. And I've adjusted the colors to gray and orange for the key levels and black to the two other key levels beyond the key level that I want to trade. So this way is like it's much easier to see when it's on the chart. I don't have all the other colors to mess things up for me. Okay, so when we were to set the period to 1 hour, right, what essentially we are asking the computer to do is if we switch to a 15-minute time frame, the key level of 143750 remains. If we go to 5 minute, it is also the same. If we change back to 1 hour, it's still the same, 143750. But then if we were to adjust it to 4 hour, then we can see that the levels change. This 143750 is now 48 instead of the 08 that we are seeing on the 1 hour. The reason why I do this is because I'm a day trader. I don't bother to look beyond 1 hour time frame because most of my trades, I will close them within the day. Ideally within between 1 to 4 hours. Once I hit my TP, I will close it. Yep, with that, let me check if I've covered all the points. Yeah, that's all of the sharing that I have for everybody regarding the thought process. So basically, just following these steps, I'm seeing great improvements. I'm still working on issues like self-control. If I lose, I tend to chase it. And very often I will use the maximum amount of losing buffer that I have, which is 4.9% in a day for a prop firm account. So, but then the reverse is true as well. When I win, I keep chasing. So sometimes I make like between 5 up to 10% in a day. So that keeps my risk reward for a day good because when I lose 4.9. When I win, I make more than 5% usually. And yeah, the biggest thing that I'm still working on is how do I let go and not lose the full 4.9%. And after a very bad day, how do I recover the next day, right? Is by following this process that I've just shared. It is really helping me to increase my odds. And yeah, on good days recently, I'm making quite a lot. So fingers crossed. Hope I can keep my funded accounts going and continue to get payouts. Hope this session adds value to you and helps you in your journey. Let's grow together. Bye for now.